This week has been a heck of a lot better than it could have been. Fed Chief Jay Powell spent the last 2 days testifying on the Hill, total minefield, and we've made our way through that without getting blown up. But as much as I welcome any respite from the horrific action we've gotten used to over the last 6 odd months, I just can't feel as good as I would like about this market. I would love to come out here and tell you that you can buy stocks that the market has bottomed. But it's simply not yet true for many equities. Putting aside every other negative, there's one big reason why it is so hard to call the bottom in the market yet. Many of the earnings estimates for individual companies are still too high. The numbers for both the current quarter and the rest of the year haven't come down enough, and we're about to enter a second quarter earnings season that some think could be hell on wheels. We know the Fed's slamming the brakes on the economy in order to tamp down on inflation, and while that might not send us into a true recession, it definitely means we're headed for some kind of slowdown. It's orchestrated. Yet right now, when you look at the analyst consensus earnings estimates for the stocks in the S&P 500, they're predicting 8% growth, followed by an 11% next year. You know what? I find that hard to believe. 8% to 11% earnings growth is basically what you'd expect in an average year. To put that in perspective, over the last 2 decades, the average earnings growth for the S&P 500 was 11%. Right now, the estimates are saying the next 18 months will be not too good, but not too bad either. To me, that sounds kind of a little bit out of whack with reality. Somehow we hear constant chatter about how the economy is headed for an inevitable recession, yet the earnings estimates for the S&P 500 suggest we're looking at a more or less okay year in 2022, decent year in 2023. Again, I personally don't think a recession is inevitable, but I'm convinced 2022 will be a decidedly below average year, and that means the earnings estimates for the vast bulk of stocks in the S&P 500 are way too high.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.